If you are a trader and you've been trading for any reasonable amount of time, you no doubt know at this point that fundamental economic-based news moves markets, and it can move them quite a lot. In fact, most traders that try to trade in and around news announcements get royally beat up in their trading accounts, usually leading to huge losses. So in this lesson, I'm going to teach you an entirely different framework around understanding how news impacts markets. In fact, this is something that most traders have no idea about when it comes to news. So stay tuned, you're not going to want to miss this one. Now, in talking about news events when it comes to trading, I'm talking about planned news events. That's what we want to focus on. These are things in Forex like the FOMC rate decision. These are things like GDP or non-farm payrolls. In stocks, it would be earnings reports and things like that. These are the types of things that we're talking about that most traders have no idea what to do with and how to trade them effectively. And it's because they view them in the wrong way. They don't really understand what these things mean for the market. Instead of doing like what all the other traders are trying to do, which is predict what the numbers are going to be and speculate based off of those news releases, you need to look at these in one way and one way only. Energy. You want to view all planned news announcements when it comes to trading as energy coming into the market. Why is that? What does that translate to? It translates into people with opinions willing to transact. You have a bunch of people that know these news events are coming out. They're watching the economic calendar count down. They're all lining up at the gate with their opinions, with their accounts locked and loaded, ready to put their opinions to work and transact. And when those transactions come into the market, it creates energy in the form of movement. Now, what most traders have no idea is actually at play behind the scenes is a pattern that supersedes all news announcements that are planned. I'm not talking about unplanned news announcements. These are planned. There is an algorithm at work that controls the outcome of those news announcements above and beyond what happens in the moment of the release. And this is completely predictable in most cases if you know what you're looking for. And it's because traders get in on the news or around the news, but they get out based on pain. So someone can have a completely fundamentally based opinion to start with, but the moment they put that position in the market, they are now locked in on that price level. They're saying, am I in profit? Am I in loss? And when they're in profit, they're going to feel good about it. When they're in loss, they're going to want to close a trade because they're in pain. But if you understand traders' pain thresholds, you can map them out, and that gives you some incredible insight when it comes to trading news. You can almost think of the markets as something kind of similar to lungs breathing. You have when you exhale, lungs contract, and when you inhale, the lungs expand. So the markets operate very similar to that. You have contracting markets, and then you have expanding markets. And the markets are doing this all the time. They're either contracting or expanding, contracting or expanding. And a lot of traders put different kinds of wedge patterns and different things to this to try to isolate specific characteristics. But all in all, this is all it's doing if you want to get down to very, very simple basics. It contracts and it expands and travels higher or lower. Contracts, expands, travels higher and lower. This is all you really need to be attached to understand where the market's likely headed next. And you could also think of this as energy getting lower in the contraction and then energy increasing in the expansion. And it's always working through what we call the three market phases: the contraction, the expansion, and the trend phase. That's what we call the master pattern. If you want to learn about that, go watch the other videos on my channel because I always talk about that. I'm not going to talk about that too much in this lesson. How can we use news in conjunction with this understanding to help us trade it more effectively? So let's take a look at the market cycles that are always happening no matter what, but with news versus without news. Starting with without news. The normal trading velocity will result in the three market phases or the contraction and expansion pattern that's always happening playing out over a longer period of time. Versus when you have news trading velocity, you have that energy coming into the market. It changes nothing other than it does the same three phases in a shorter period of time. That's it. That's the only difference. So if you want to predict likely what's going to happen at a news event, you should be studying where you are in this pattern, because ultimately the markets are hunting for liquidity. That's all the banks care about, is being able to effectively get into their trade and get out of their trade. And if you're trading billions of dollars, you're trying to make a return on, let's say, hundreds of billions of dollars, you want energy to come into the market. All those willing opinions, those participants coming in ready to transact, because that means the banks can fill their positions with ease. But it doesn't change how they have to accumulate effectively to actually make a profit. Hey, ChatGPT, is liquidity an issue for a bank if they're trying to make a return on, let's say, hundreds of billions of dollars while trading in a Forex pair like Euro USD?
Yes, liquidity can still be a factor. Even for large institutions like banks, while the EUR-USD pair is the most liquid in the Forex market, liquidity is not unlimited. If a bank is trading in the hundreds of billions, its trades could impact market prices. Banks often break large orders into smaller chunks or use algorithms to minimize market impact. Does this help clarify?
That was perfect. Thank you. So you heard it here first, folks. ChatGPT says that liquidity can be an issue for the banks to make a return on a sizable amount of money. And you know that we can always trust what ChatGPT says 100% of the time. I'm just kidding about that last part. But they are correct that liquidity is an issue. So how does news play into the bank's accumulation and distribution process, which is how they make their money? Let's take a look. The way that we look at the banks and how they run financial markets is through the higher time frames. I'm talking about higher time frames like the monthly, the weekly, and the daily. When we observe these time frames and the directions they're headed, that shows us the general intention of where the bank is pushing the flow of money. We look at those for the trend, but then we get these short-term news release situations where the market fluctuates and goes crazy, right? So let's say that we have a defined overall higher time frame direction, and then we have the market run up, it starts to contract, goes into that tight spot right there, and then boom, the news release happens. It whips, it goes crazy. What's happening there? Well, this becomes a great opportunity for the banks to accumulate inventory at a great price. When the news release hits, it spikes up a lot of times if the overall trend's already going up, and then a lot of traders will jump in. They'll buy right here. But what comes with those new buying beliefs of those traders? It comes with the counter of a stop loss, right? Because if they think it's going to go up, then they're not going to feel so hot when it comes back down. So as the market comes down, the banks are able to easily harvest liquidity right down here in this zone. And why is that? It's because everybody that previously bought is now wanting to sell. And the other side of a sell order is a buy order. So the banks are able to buy right here, and then the market then is allowed to take off back in the higher macro time frame direction, where the banks can then sell their inventory out to, who do you think buys it? It's the people chasing the market. It's the same people that lost here are the same people that are rebuying here, but the difference is the banks are now taking profits off the table. So the news release is nothing more than fuel to this cycle. The cycle's going to happen no matter what, but the news makes it happen aggressively fast. Another thing that you're going to want to pay close attention to is where you are in the cycle on your higher time frames. What do I mean by that? I mean, where are you positioned relative to the three market phases? Because as this energy comes into the market in the form of this news announcement, the banks, the higher time frames, are going to look to where they could drive price to harvest liquidity. So in a situation like this, we're looking at the daily chart here, it would have ran up, and let's say it's gone into a contraction, and now it's starting to expand a little bit here. In this situation, since it broke out to the short side, we can conclude that traders have started to sell the market short to some degree. Where would their stop losses be? They would most likely be sitting on top of this localized neutral point, or localized framework, we call it. So we can conclude that there's buy liquidity right above this box. So when the news hits right here, that news release comes out, we can pretty safely conclude that the market is likely to go long at the news release in expectation that it's going to take out that liquidity that's resting right above those highs. This will help you project where the markets are likely to go with an extreme degree of accuracy. So something extremely similar to this situation just played out yesterday. It was a trade that I was in during the FOMC meeting with the rate decision, and I happened to record the entire news release, and I'm going to play that for you right now. All right, welcome back to another live trade video. So I have two positions in here. Let me explain briefly what I got going on. I have 2/3 of my total comfortable position down here at the bottom, and I have the other 1/3 up here. So I'm in at full size. We have the rate decision coming out here in about 7 minutes. And so I'm positioned, I'm in the money just about on my second position. And I'm in the money decent on the first position, so I have a little bit of room there. But I'm expecting the market to break long, and let me explain why. Typically, when I teach about how news impacts the market, a lot of people are looking at what's the number, what's it all mean. We don't care about any of that. What we look at is news as energy. It's willing buyers and sellers and transactional energy coming into the market. So my consensus on this is that it's going to break long, and the reason for that is that when the energy from the news comes into the market, it just speeds up the three market phases. It doesn't change them. And this is planned news. This is not unplanned news is different. Planned news just speeds up these patterns. So as you can see right now, I've been working this idea on the daily. I've done some past trade videos on what I've done in here. But as of right now, you can see that we're holding above this institutional level right here. We've ran the low of the previous day, and we're trading up in the middle. And you can see that it's been reaching for the top of this box. So when this news comes out, I think there's a strong chance, I don't know 100%, but I think there's a strong chance it's going to complete coming through the top of this box and then potentially maybe higher than that. So my trading idea is to complete the master pattern, to use this energy from the rate decision that I think it's going to be used to run the high of this box, complete this master pattern's two-leg cycle. We have our swing low, and that'll complete our swing high coming through the top, and then run a little bit above that, and then I'm going to close it. So that's what I think is likely to happen based off the market framework. Again, I could be wrong on that, but that's I've bought, so that's what I'm counting on. So anyway, we're going to let the news hit here in about 5 minutes, and we're going to see what happens. So in this type of situation, I like to move my take profit way up just in case the market really spikes. That way I can immediately capture that big profit. So the news is about to hit right now. I'm going to go ahead and open my positions up and get my mouse ready so I could click out just in case it really goes here. All right, so you can see it's taking off, and immediately we're up through the high of the box. And that's essentially the completion of my trading idea. So I'm looking to close right now, but what I'm looking for is if it's going to aggressively move any higher. And I notice that it doesn't, so I go ahead and I close out right now and get out of that trade, and that is it. And there you have it. So ended up getting out. I wanted to see a little more aggressive follow through the top. Doesn't mean that it still can't keep going through the top of the daily. However, I had a really good profit at that level. I was up through the target coming through the news that I was looking for in this situation. So I took it. So, but that's it. Again, coming out of this lesson, everyone really, or a lot of traders really obsess about the news and what does the news mean and how should I trade the news? The news is energy. And if you understand where you are in the cycle on your higher time frames, and I'm talking about the 4-hour, the daily, the weekly, and the monthly, what those are doing, then that energy coming into the market will just serve as quick burning fuel to complete that cycle. And as you can see right now, it was easy to make that projection based off of where we were on the in position on this this box and this expansion cycle on the daily. Was not hard to come to this conclusion, and therefore, I could make a pretty sizable and straightforward bet, essentially, that that it was going to work out to the long side with relative certainty. Of course, I could have been wrong. Things do happen, but the higher time frames are all going long. The daily was looking for a completion on that second expansion leg. So I felt pretty positive that I was going to be right on this one. So it'll probably still keep going further. I don't really care. I made a huge profit on this, and that it served exactly what I was looking to do. So I'm going to take that win, and I'm going to move on to the next one. So as you can see from that live trade example, if you understand what I'm talking about, you could really, really level up your news trading game and definitely spare yourself a lot of unnecessary losses. So in conclusion, news equals energy. We care not what the numbers are. All we care about is that there are willing participants coming to play the game of trading. But the people that understand the true game, the one that's happening behind the scenes, are going to be the real winners at the end of the day. Market phases never change. News just simply speeds them up, just makes them go faster. And the question you want to ask when that news hits is, where is the easy liquidity? That's the only question you really need to ask all the time, because when you figure that out, you're going to be thinking like the banks, and that's what's going to help you trade like a professional. Thanks again so much for taking the time to watch this video. I hope it was helpful for you. Remember, like and subscribe, because I'm going to be dropping videos like this all the time. Until the next one, I'll catch you later.